Yeah, so we saw the CPI and PPI numbers declining just a little bit, which is what the market wanted to see. I think the one thing that stood out to me is that if you stripped out the core from the CPI, the number didn't really fall much. In fact, it upticked very, very slightly. So again, the PPI number was a very good number. It told us that on the producer side, inflation is dropping. The CPI number, if you took out food and energy, it was not dropping quite as much. So right now, the market's liking this. We're seeing a good risk-on environment. But I want to see what happens as we get into earnings season and what happens if we look at a recession like the Fed has now said we will get in the second half of the year.
Bitcoin barely held $27,000 on April 22nd as another round of losses left bulls with little firepower. In contrast to United States equities, which managed to seal modest gains on the day, Bitcoin continued to suffer as analysts warned of a return to nearer $25,000. With that, BTC/USD was down 10% for the week and 4% in April overall, according to data from monitoring resource CoinGlass, amid a dramatic turnaround in fortunes versus much of Q1. Hello and welcome to Crypto Street. In today's video, Gareth Soloway updates about Bitcoin's current market standing and his outlook for Bitcoin in 2023.
Yeah, so we are at an epic level on Bitcoin, all right? And what I mean by that is that in terms of psychology of the market, this level is the top level to watch, meaning that if we can break it, that's very bullish that the lows are officially in on Bitcoin at 15,700. If we can't, then to me, there's still an opening for Bitcoin to go down to 12 to 13,000 level and maybe even below that. And the reason I bring up this level at 30,500 specifically is if we take a trend line and we go back to the lows starting in 2021 before the big pop, then the retrace came right back in there where we hammered on it for a long period of time. We then had the run to 69,000 and we came back in and consolidated right along that line. So psychologically, when we broke this, that was very bearish for crypto. If we could get above it and stay above it, then that's very bullish for crypto. So again, right now we have made a full round trip from this breakdown here all the way back to that level, but we're still hammering on that level. And again, the level's approximately 30,500. So for me, this is an epic level to watch. I want to see, can it get above? Can it stay above if it gets above? If it does, I think that bodes very well that the crypto markets have bottomed out for this bear market cycle. So it's so interesting on the Bitcoin price because number one, when it was at 15,700, 20,000 even, we were oversold. There's no doubt about it. We were just coming off of FTX's collapse, lots of fear, all that stuff. Anytime you get a maximum fear, you're going to get a reflex buy and kind of pop. It's just the nature of the cycle of markets. What ended up happening is after we were up here, we started to fall back down. And then the banking crisis happened, and I think there was a lot of money that went right in from the regionals into Bitcoin, right? I mean, and again, I've said this before, but if there's one reason for Bitcoin to be Bitcoin and be what it is, that crisis in the banking markets showed it, right? I mean, that's exactly what Bitcoin is supposed to be. It's supposed to be an alternative to the fiat currency system and the banks and all that stuff. So that really propelled new money in. And then as of now, we've seen generally a risk-on environment in stocks, in cryptocurrencies, which has kept it kind of grinding higher. So I think that was kind of a little bit of a situation where it was very, very good for the crypto markets in Bitcoin. Now, again, the big question is, can it get through here? If the stock market starts to decline precipitously, does that pull it back down? I do think it's still a risk asset, even though it's still showing signs every once in a while of being a store of safety. So as of now, as long as we stay below this 30,500 level, I'm going to remain slightly bearish, thinking we still are not through the bear market. But again, if we get above there, then it could be a game changer.
For popular trader Credible Crypto, however, there was still every reason to hope that the long-term uptrend remained intact. If your macro thesis on Bitcoin has changed because of a $2,000 pullback after a $10,000 plus vertical rally from 19K to 30K plus, you're doing it wrong, he insisted in part of his latest Twitter commentary.
Yeah, so I think the key is when you're getting inflation to come down from 9% or so, the initial move down will be very quick because, again, that was really inflated due to supply chain issues and other things like that. The trouble is always the last little bit. And I always liken this to, people can get in shape or I can get in shape, but how much more do I have to do to just get that six pack, right? It's that last little bit that's the hardest to achieve. And I think for me, that's looking at the market and the economy and saying, okay, inflation should come back to 3%, give or take, but can the Fed get it to 2%? Can they get it to below 2%? And I'm skeptical on that. I think it could take years for us to get below 2% again, and that's going to put handcuffs on the Fed in terms of if we do hit this light recession they're predicting now, how do they get us out of that? Or does it turn in, and this is my fear, is that it turns into a recession that lasts a long time. We find ourselves in this light recession, but one that lasts for potentially a year or two. Yeah, so I think the Fed is probably on point to raise 25 basis points more. I think they're being a little bit more careful now because of the banking crisis. Even though we've seen that the banking crisis seems to have subsided, one of the concerns I have is looking at the regional bank ETF, the KRE. And the KRE still is showing us that we're not really out of this crisis. We're not bouncing back and getting back some of the losses that we had on that chart. And so you have to be, as an investor, someone who's very concerned here that maybe things could escalate again at some point. And I think one thing to pay attention to is Jamie Dimon recently did say that it's not over and that there are still possible hiccups in the banking system to come. And the market, again, is in this groove of ignoring a lot of these things. You know, they ignored the Fed saying we were going to have a slight recession. They're ignoring Jamie Dimon saying this. Warren Buffett was on CNBC recently, and he said that one of his retail companies, their sales year over year were down 22%. Market ignored it. Wasn't even a headline. So there are these things that are going on right now that, to me, have me becoming more and more conservative and more bearish, while the overall market seems to be ignoring this, and it's risk on. Yeah, so I think the Fed, again, and this is the tricky thing, is that the Fed said a mild recession. They also said inflation was going to be transitory, and we know what happened there. So I think the Fed has a huge credibility problem. I certainly don't put a lot of credence into what they say it's going to be. I mean, if they're telling us it's going to be a mild recession, I would generally price into my investments a mid-level recession, right? And so I think investors have to be aware of that. Do you trust the Fed? I mean, if the Fed's telling you this, do you think it's going to be that, or is it going to be worse than what they say? So for me, it's saying, okay, a recession's coming. The question to me is, how do we get out of a recession? The past 15 years, the Fed has bailed us out because inflation's been below 2%. What now happens if inflation's at 3% or 3.5%? Can they bail us out without causing a massive spike in inflation again, like we saw in the 80s? So it's this is now entering, to me, a phase of the stock market of investments where investors now have to be very careful. Historically, when the Fed actually even cuts rates, that's been a period where the stock market actually declines, even though right now it seems like investors would be thrilled if the Fed started to make money cheaper. The reason why historically the markets have declined is because if the Fed's cutting, something in the economy is really broken and they're feeling forced to cut. And that, again, would be a situation where I would be very nervous if we get to that point.
Legendary investor Warren Buffett sees no value in Bitcoin, infamously calling it rat poison squared. But data shows that adding Bitcoin to a so-called rat poison portfolio, an equally weighted portfolio of Berkshire Hathaway, Microsoft, JP Morgan, and BlackRock stocks, would have produced much better returns for the Oracle of Omaha. Bitcoin has outperformed Berkshire Hathaway by 320,000%. Bitcoin proponents have projected it as an alternative to traditional safe haven assets, such as gold, given the scarcity that comes with its fixed supply of 21 million BTC and increasing deflation over time. This has attracted many people to buy Bitcoin as a way of offsetting fiat debasement and excessive money printing by central banks around the world. For instance, the number of non-zero Bitcoin addresses has grown from around 2,500 in 2009 to over 45 million in 2023 per Glassnode.
Yeah, so I'm not sure about the banking sector itself, if we'll have some major issues, that continue. But the one thing I do know is that when you have inflation, when you have interest rates that are at 0.25 basis points and you raise them to 5% in a very short period of time, you're going to break things in the system. The banking sector, the regional banks that we saw go under, that was just the start. To me, that was a tremor before something bigger. So I highly doubt that when they jack rates up this much, that's the only issue we have, and that somehow we're going to avoid any sort of major recession or major breakages in the economy. I'm more in the camp that this is probably a precursor to some other big things that are coming down the pike. Yeah, so to me, this is definitely the real deal, right? And part of it is going historically back to the 1970s. I think we've talked about that before, how how the pattern that we saw from 2018 to 2020, from 2020 to 2022, and now this starting up move is totally almost a replica of what happened in the 1970s, where gold actually, after that consolidation period, started to do a 9x return. It went from about $100 to about $900 an ounce. Now, again, I don't think that we'll do a 9x here on gold at these levels, but at the same time, to me, this is the replication of human sentiment and what's going to come forward. So I do think that per the charts, and I've been bullish on gold for the last couple of years, is that we should break the all-time highs at around 2075. And I think by year end, you're looking at 2,300 at minimum. And I think really 5,000 within a year or two is very, very possible. This should be the new bull market here in asset prices, if you will. And I think it's long overdue. And we should see, yeah, I mean, I continue to be very, very bullish on gold.
So, what are your thoughts about Gareth Soloway's prediction? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.